Todd Gleason services are made available to WILL by University of Illinois Extension.
This is the November 14 edition of Commodity Week. I'm Illinois Extension's Todd Gleason. We're joined by Lance Honig, who is the chief of the crops branch at USDA NASS today, along with Matt Bennett of agmarket.net and Arlan Suderman of FCStone. Commodity Week is a production of Illinois Public Media. Find us online at willag.org, willag.org. There you can listen to all of our agricultural programming. I think I'll begin by opening this time around with some questions from you, Matt and Arlan. Maybe you have some questions that you'd like to ask Lance about the crop production reports and how USDA gathers them, or some of the numbers that you've seen recently.
Yeah, and I first want to say that USDA NASS, I think, is the envy of the world. And I've said it publicly other times, and I think we need to establish that. We work with offices around the world, and they're envious of the quality of data that we get here. And I think when I have a disagreement with NASS, it's not over the integrity of the process, but it's a debate over the process, whether to do it one way or the other. But they try to hold to the integrity of what they do. But my question is, I think, relevant to a rather unique situation this year once again, is of a wet, low test weight corn crop going into the bin. We saw this in 2009 as well, and lo and behold, we took fewer bushels out of the bin than what we put into the bin. And I raised the question with NASS at that time: has there been any structural changes in your process to maybe try to account for that this time as well? You take that wet, low test weight corn, you run it through the dryer, and you pull fewer bushels out. And then lo and behold, we got a big surprise in the June 30th stocks report in 2010. Any adjustments this year for that?
Well, you know, anytime you have a crop like we have this year, that is a risk that you run. If you look at how those stocks numbers come together, where they come from, you know, you've got on-farm, you've got off-farm, two separate sources that we go to. For the on-farm piece, we're going to go to about 80,000 farmers the first 2 weeks of December. And we're going to ask them to tell us how many bushels they've got stored on their farm, and that's where the problem potentially comes in, is if they don't have the number of bushels that they think they have, then it's going to take a while before we find that out. And really, there's no easy solution to that. That's the problem. You know, unless you're able to actually, run that over a scale somewhere, you're probably not going to know. And the one advantage we might have is, this has come up a time or two over the last few years, and maybe farmers are a little bit more aware, and maybe some of that will factor into their reporting. But that's kind of the challenge that we run into. The off-farm side, not such a big problem there. Of course, that data is coming from the commercials, and of course, it has run over a scale. It's been put through all the paces there. They know exactly what they've got. And of course, if there's a problem, then that's the reason that we pick it up later on in the season, because as that grain makes its way through the different channels and ends up in those off-farm facilities, that's when we usually find out.
Over the years, have you been able to discern, as yield monitors have gotten better and farmers have gotten better at relying on them, because they do announce dry bushels rather than the wet bushels, that you've had a closing of the gap? And do you think that might happen this year?
Well, it's really hard to say, because until you have a year like this, you don't really know if you've made advances from things like that. One of the challenges that we know we have with some of the yield monitors and things of that nature is that they've got to be properly calibrated in order to give you accurate results. And, that's a process that has to happen pretty frequently if you want to keep things working right.
I want to follow up with one other question. Do you give any direction in and I don't know whether it's a written survey or whether it's a call, I think it's a phone call survey. Do you give them any direction on how to come up with the number of bushels?
So they've got options in how they report. You mentioned being written versus phone report. Just so you know, everybody gets the option to either mail a form back in or complete it online, first of all. If they don't take that option, then we do revert to making phone calls to pick up those missing reports. A few folks will get a personal visit as well, but that's, a much smaller number. But if you look at the form itself, we keep the instructions fairly simple. We're looking for total bushels stored. If you get into the instructions, you'll find that we're looking for standard moisture, we're looking for standard test weight, but again, unless that grain's been run over a scale and has been moisture tested, you're probably not likely to have that. And number two, it would probably be unrealistically to expect that when they fill out these forms that a farmer's going to sit down and do a lot of calculations to try to get that back to that level. I think that would be more than what would be reasonable for us to expect.
I think the first thing for me is just to follow up on this is that, last year a lot of farmers they filled up a bin that held 20,000 bushels. They pulled 21,000 bushels out. And we were in the grain business my entire youth. And so we got out in 2009. And then I managed a commercial system where I was at there for 5 years. But one thing that I feel like is going to happen this year, I feel fairly confident they're going to fill that same bin. They're going to pull 18,000 bushels out, especially when you get west and in the upper Midwest where you had frost freeze issues. The next thing I guess I just want to make a comment on, give you a chance to address, because I think a lot of people want to know, when this report came out last week, there was a movement in the market as soon as 11 o'clock rolled around. And I know that everyone wants to be skeptical. Everyone wants to, throw shade, whether it be at news people or whether it be at our government offices. And I'm like Arlan. I've got a lot of respect for the USDA. But what would be the explanation to you as to why the market moved whenever no one was able to see the information at 11 o'clock from being down in the corn market to being up? Did you guys have an explanation for that, or have you looked into how that maybe possibly happened, that someone was in there buying, a decent amount of corn?
Well, the crop production report actually was out at noon Eastern time. Now, there were some problems with the website, so depending on how you link to the report, there were some challenges getting to that, so not everyone through their regular path saw it right away at noon. But our logs indicate that it was first available and accessed 4 seconds after noon Eastern time. So that report was out there on time. Now, there were some different issues associated with the WSDA that had to do with the network outage here in Kansas City. So I think it was probably closer to 10 minutes before that one was able to be served up. But I would imagine, I'm not an expert on what happens with the markets, but I would imagine since the crop production report was available right at noon, that probably would have been enough to at least make the markets start to move. So I think that's probably why. And I know there was a lot of confusion about which report was there, which one wasn't. Right. But after digging into everything, that's what we found to be true, is that crop production was there within 4 seconds.
And was it there in all places available, or was it at Cornell, which I think handles a lot of the archival storage, but not on the NASS site?
So actually the report was available both at Cornell, which as you indicated, that's kind of the archive spot. It was also available on the NASS release server, but the problem was that if you clicked on the link, a particular link to go to the NASS server, some of those links didn't work right. There were some things out of sync. So again, it's all about how you access the report, but it was available on both servers.
I think that this makes another argument again about the release of data while the markets are open, and that's probably more of a CME group, et cetera, question than it is USDA, although I guess both parties are involved. But if this had happened when the markets were closed, it wouldn't have affected the fairness of the trade so much. And so that's the technical issue we get into. And I know within our offices, we were probing all the different links and getting it from some links and not others. And so we saw the trading, and I agree with you that it was the NASS data being traded first, I believe, versus the WSDA. But then we were able to access the NASS and others were not able to. And so you have some accessing and some not. And so it brings up the whole argument, which I'm sure the trading exchanges love currently because they love the volatility that you get around that release time and the algos and the money that's made from that. But this certainly makes an argument for that.
Yeah, but one of the challenges, and of course, if you step back in time a little bit, part of the reason that we made the last change from, noon from 8:30 a.m. to noon was, it had to do with access and when the markets were most active and things of that nature. But also, at least back in that time, we had basically 24-hour trading. And so the time didn't matter as much. And even though some of that has changed now, there is the concern that if you start trying to move, because there are those who want to see it open, that open time could just move to follow that as well. And we've seen some evidence of that in the past, right? And so I'm not saying it's not something that couldn't be explored, but I'm not sure that everybody has the same desired outcome when it comes to this topic.
What you're suggesting is that if you move it, the CME group will continue to stay open until after your market, on that market day particularly.
Well, I'm just saying that's a possibility. So we just have to be aware that the solution for one side might not be the same solution that another side wants to see.
One question I wanted to ask, and Todd preempted me a little bit, but one of the main questions I continue to get as far as the report was released, and I know that you're not in charge of this, but I've had a lot of questions on the feed and residual usage category being between last year to this year, you're talking 343 million bushel drop. And then the baseline numbers, I know they're just baseline numbers, but it would suggest that there's a $500 million increase from this marketing year to next marketing year. Do you have an opinion on that? I know that you're not in charge of this, but do you have an opinion upon those two numbers and the fluctuation there, and maybe an understanding of where people are maybe raising some eyebrows?
Well, yeah, and obviously I'm not responsible for that or in charge of it, but at the end of the day, the feed and residual category for the World Board is kind of a catch-all, right? I mean, they've got pretty much absolute numbers to plug in, at least by the end, for the rest of the categories, and they're kind of left, that's why we use the term residual, right? Because that's where the number that's left over has to go. For corn, it's tough because there's so much that goes into that feed and residual category. The feed use alone we don't know what it is. We know it's a big number, but we don't know what it is. There's no current way out there to measure that. And so to fine-tune other pieces of the balance sheet, in particular the production, becomes kind of an interesting thing to think about, because how much fine-tuning do you want to know, or do you want to do to a number that we've got a really good measure on based on what we're seeing in a pretty big number in a category that we really don't have a measure on? So that's a tough topic, especially in a year like this when you do see a number that certainly looks different than what we've seen in the past.
So I have a follow-up question on that, and I also want you to think about questions you might want to ask Matt or Arlan here related to the grain stocks report, which feeds into that feed and residual. When you do the December 1 stocks number, how much difficulty are you going to have gathering all the information about the crop that probably hasn't even been harvested yet?
Well, so that's not actually that difficult for us, because what's going to happen is, at least if the instructions are followed, the producer is going to report the quantity that they already have harvested and stored on their operation. We're going to pick that up in the stocks. That's no problem. But we've also got a section on the questionnaire to ask how many of those acres are still left to be harvested this year, what they expect the yield to be for those particular acres. So we're going to be left with a measure of the unharvested production that they still expect to harvest, and that is by definition for us included in the on-farm stock. So we're just going to move that total into the stocks category that we already collected.
And a related question to that, with the lack of harvest progress, particularly in the Northwestern Midwest, could you address a little bit? I know as you're doing your objective field survey, you're taking samples. If the corn is mature, you use actual weights. If it's less than mature, then you model you take the weight and then you model what it would be, as I understand it. And correct me if I'm wrong on that. Now, your last sampling, if you have frozen corn, how do you evaluate that being mature or not mature? Because that tends to change the maturity process. How do you determine if that's mature? And then related to that, how do you follow up then? Because January report, if you've got some corn that's waiting for the spring thaw to get those final yields, what's the challenge of that process and how do you handle that challenge?
So for the objective yield, of course, it doesn't matter what month it is. When the enumerator goes into the field, the first thing they do is determine maturity, and that drives everything that they do. Temperature's not really going to be a factor for them at that point. We did have, well over 90% of those samples for us had already gone through the lab this last month, so we don't have a whole lot of objective yield work left to do. But as we work through that process, it doesn't have to be in our, quote, mature category to send an ear to the lab and get weighed either. So we do have some ears that will weigh prior to maturity, and of course we do have to do some modeling with that because it isn't mature at that point. But I just wanted to point out that we do actually weigh some ears prior to maturity. But we've got a lot of other counts and measurements that we take as well that we use to model to a final yield. So a lot of information coming out of that objective yield. Now as we think about these, not samples, but rather fields that haven't been harvested, we're assuming anyway, won't be harvested in the next couple of weeks. As far as the challenge it presents, well, first of all, like I mentioned, we're going to ask for their best expectation of how many of those acres they still think they're going to be able to harvest at some point, what they think the yield's going to be. So that's what's going to flow into the January report. Now, depending on how much unharvested production there is, that's going to be what we're going to use to determine, do we need to go back and do any kind of follow-up work later on. We did run into this a number of years ago. Offhand, I can't remember exactly what year it was, where we had some harvest happening in the spring. And so we did have to go back and make some contacts then, reevaluate things. It's not ideal, but if you've got crops standing there all winter long and into the spring, it's probably not unreasonable to assume that something may have changed since what they expected in early December. So I think if we were to run into a significant amount of that, we'd have to give some serious consideration to doing that again.
First thing, I just want to say that typically whenever I talk about if I'm going to make some sort of a joke about the USDA, usually it's in fun, but then I'll follow it up and I will just say, I'll ask my crowd, how many of you know what your yield's going to be as of August 1st on your farm within, let's say 10 bushel? And typically nobody raises their hand. And I said, so the USDA is supposed to hit it within a bushel or two on 90 million acres. That's just basically what the way I handle it. But I want to go on and kind of follow up with what Arlan said here. So if we have a significant amount of corn, which I think is a reasonable reasonable assumption that we could have a significant amount of corn before this January report, is there some sort of a measure that you have in place to address field loss, which tends to be gets worse as you go through some sort of a winter weather pattern? Do you have some sort of a measure for that, or are you just simply going to be going out into the field again if you have a fair amount of corn that's going to be still standing out there to actually look and see what kind of effect you've had on ear counts?
Well, first off, I suppose maybe I should just make a reminder that, the published estimates aren't equal to exactly what the survey results are. So we do a lot of analysis. And so, when you ask a farmer if they know exactly what their yield's going to be in August, they don't. But we may know better than them because we've tracked the data. So we know based on what they tell us in August what that most likely translates to as a final yield. And there's a little bit of that could come into play with some of this crop that we're talking about at the end as well, although this doesn't happen very often. You don't have a lot of history to go back to. If we are going to need to go back and do anything afterwards, it won't be going into the fields. It'll be going back to the producers because, as we mentioned, objective yields, over, it's finished. And quite frankly, to try to go back to those sample plots, in the spring again, I'm not exactly sure what we'd find or what that would tell us anyway. So it would be going back to the farmers again and finding out from them, okay, how many of those, and quite frankly, getting the acres might be the biggest part at that point anyway, because how many of those acres, if they get left standing all winter, are they going to actually harvest in the spring? And so we would need to get that as well as what was the actual yield they got from those acres.
It would seem to me that it might be more important that you get the bean acres that were not harvested as opposed to the corn acres. Yeah.
Well, the beans are going to be a lot less likely to be viable in the spring if they're not harvested going in. But corn's a different story.
On the corn net, I want to go back to the corn that was froze in the northwestern Midwest, and that you have to try to model. How much history do you have for developing the model? I mean, it's not like that happens every year. In trying to model how is this going to dry down and how is that going to affect what the final weight is for determining yield?
So from a model perspective, we're not going to have much data there, and there's not really going to be a whole lot flowing into the model itself. So that's really going to become a factor of how we analyze the data that we have, and we have obviously the ability to look back and see in years when we've seen this happen before, what were the results then, and how do we need to apply any lessons learned from what we saw in those prior years. So that's really kind of an after modeling thing that has to happen, because there just isn't enough data to really feed a model, and it doesn't happen often enough to really make a model work well.
Do you have questions that you want to ask these guys as end users of your data? Because you do that at least once a year, all the time. You have them in, you allow them to ask questions, and you ask questions of them as well.
Well, and generally speaking, our questions to them are, and much like they'd be today, is kind of what we've been doing here. Is we want to make sure that folks are asking us the questions that they have, but also equally important is sharing ideas with us about, they know how they use the data, you guys know how you use the data. So based on what you're seeing there, is there anything that you would like to see us do differently? And I'm not talking about the tiny little details here and there, but as time goes on, we're looking at different technologies. We know that with genetics changing, that could have an impact on how we look at things when we do things. So I don't have specific questions, but I'd hope if you guys have ideas that you want to share, hey, here I am. Now's a good time.
I will start because I do have an idea that I think might be worthwhile sharing, and I've asked about this before. It would be very nice if you would offer up an embeddable file that we could all put into our own websites that would simply update with a summary list of all the numbers from the crop reports. It might start with ending stocks, harvested acres, yield, production, and then carry out. And it would be very nice if that just updated across the board on the release. So that's one thing I think might be worthwhile. You all have other ideas?
Yeah, that would be very helpful. And I think also county by county production data, that's probably more of a challenge. But, I think that comes out kind of annually or something like that. But the quicker and sooner we can have that, the more value that is to us and to our customers particularly. That would be of great value. But I know that's a big challenge too.
Well, I don't even know where to start. I think, I think I don't want. One thing that I've always said is that if I've ever gotten critical in any way, first of all, my mentor at the University of Illinois, Dr. Darrell Good, was sure to correct me there, and that I needed to remember what kind of a job you guys have on hand. And one thing that I'll say is I don't want your job by any stretch of the imagination. Now, I think one of the main things, again, same type of thing that you said, Todd, any way that we can get the data in a really crisp format where we can plug it into our tables, to me, makes everyone's job significantly easier. But me personally, I understand the issue with potentially CME changing their opening times, but I sure wish that we could have the release of the data when markets weren't open. It would make to me, it would level the playing field significantly for guys like Arlan and I that are trying to digest this with a human brain instead of a computer brain, because it certainly changes the ball game for guys that are in the risk management business.
Maybe you could just dump it into QuickBooks and everybody could access it online really, really fast. That might be worthwhile. So thank you for taking the time and for listening, too. We appreciate that.
Sure, and just so that you know, we are doing a lot of work right now, looking into some ways to enhance not only the data that's on our website, but how we deliver that data. I think our long-term goal, I shouldn't say long-term, maybe it's a medium-term goal, is certainly to look at how we're disseminating the data and get away from a 40 or 50 page physical report packed with numbers and try to improve the delivery in a much more readable format, and then make that what we think of as a paper type of report, more of a highlights type document. But before we do that, we've got to enhance the delivery of the electronic version that we're doing now. We know that needs a little bit of improvement. We're working on that, and I think ultimately we're going to be able to deliver something more in line with what you guys are talking about.
We should probably take some time to reintroduce our panelists for the day. They include Lance Honig, who you just heard. He's the chief of the crops branch at USDA NASS. We're here along with Matt Bennett with agmarket.net and Arlan Suderman, who is with FCStone. I think we probably should talk about the markets just a little bit with the two of you, and maybe Lance will have something to say as well after this USDA report, Arlan, and with the snowfall in the Northwest, the very cold temperatures that have taken place, and the crop progress report that was released out Monday, we still know there's a lot of corn yet to be shucked. How do we deal with this in terms of marketing, and what is your assessment of the impact on the trade flow?
Well, there's a couple aspects of that. First of all, from a producer standpoint, I hear a lot of producers saying, wow, the basis is strong. That means the crop's not there. Well, if the basis is so strong, what are you doing about it? What are the risks of that basis going significantly higher? And what are the risks of that basis collapsing if the board does go up, or if we see the trade talks fall apart? And there's things you can do to lock into basis and still leave the board portion of it open. The other side of it is this is really all hinging around China. The funds made a living on shorting the ag commodities during the year and a half of the trade war with China. They have unwound a lot of those shorts and are preparing to go long if necessary, if in fact we get a trade deal with favorable details. But they're waiting. And so that waiting, not knowing details, have the markets really stagnant now, and we're getting into the holiday malaise period of time. That means your basis is vulnerable, but that also means that the markets are just waiting for clarity.
The thing about it, I totally agree with a lot of what Arlan's saying here. One thing that we have to be very cautious of, a couple, 3 weeks ago, some of our guys were looking at the basis saying, man, we've got to lock this strong basis in. And we've agreed that if we're hauling it across the scale at the elevator, by all means, we probably want to lock basis in. The thing about you can re-own corn very cheaply, but at the same time, I've had guys say, what should I do with the bushels at home? Should I go ahead and lock that basis in as well? I said, no, let's hold on just a second here, because the problem is if the market would tend to be sideways to lower still, and we just can't get this market too excited to get the bushels purchased, what are we going to see from the grain industry? And most likely the basis is going to get better. So if I lock in too much of my corn and then the market actually goes lower, that's a bad place to be sitting. So I totally agree on the bushels that go to the elevator. I want to lock the basis in, especially on corn, first of all. I mean, just for instance, we've talked about this, Todd, but, ADM Decatur there, right there in our backyard, as well as other ADMs, but right there in our backyard, 20 over basis. And by the way, they're drying the corn for free all the way up to 19%. I mean, that's something that you typically see. And so there are some real opportunities out there for producers. But with that being said, if I'm going to sell the corn, then I need to check around just a little bit too. And I don't want any of the originators sending me hate mail here, but the bottom line is they're looking for corn. And if you're looking for corn, then if they're posting a 20 over bid at that time, then I sure as heck want to be asking for more. The worst thing that they can say is no, but chances are from what we're hearing, it's a more likely scenario that you're going to come to some sort of an arbitrage of that price, whether it comes to your price or whether you meet in the middle. But bottom line is this is a very exciting market from a cash standpoint, but we have to be very proactive as far as the communication goes.
So what cash price, and we'll use the local area Decatur, but what cash price would you be willing to open the bin door up? And I'll ask you the same thing, Arlan. and to run bushels across the scale for a sale in that case.
Yeah, well, amazingly, a lot of folks are saying the $4 handle again, and we were just at 402 D's corn a couple weeks ago on Sunday night. But the unfortunate thing, of course, we've scaled back. And as we've scaled back, the basis has improved. So, at what level are producers going to open the bin doors? My simple answer for you, Todd, is just a little bit better than posted. I mean, if the market goes down tomorrow another nickel and we're back at $3.95, $4 is probably going to do it. But if the posted bid today is $4, and I don't know that it is anywhere, I think it's around $3.96. If the posted bid's $4, they're going to want $4.05. And so bottom line, it's going to be just a little bit better than what the market is, unfortunately. But we got to be very cautious here is to make too many assumptions that this market is going to continue to offer opportunities.
Yeah, and Matt said it well, and I agree with that. And right now, the government checks, market facilitation payments are buying the time for the producer. And that's one of the big reasons for the strong basis. And we hear so much rhetoric about demand is horrible. Well, demand is softer in the United States for corn than what we'd like to see, but globally demand is still exceeding production. Even with African swine fever, we're still consuming more than we're producing in the world. And so corn fundamentals could easily go either way, depending on that final production report and depending on what we get out of the China trade agreement. And producers need to be monitoring their risk exposure in both directions because we're kind of trading a sideways trading range, and the money is right in the middle now, ready to go in either direction, depending on how that comes out. Plus, we got the USMCA as well, if we would get that passed before the end of the year.
What you're telling me is it's been a hard marketing year for producers to make a decision all year long because they didn't have a crop in the ground, and then they weren't sure that it was going to make it, and then they had corn and they were going to harvest it, but it was coming in late, and suddenly they have to dry it, and it's better than they expected, and they still can't figure out when to market it.
Yeah, so the thing is, when everything seems like what's going to happen, find something that you can control. And I agree with Matt's comments on the basis, but that's one of the areas, particularly with what you have in commercial storage or whatever, that's something you can do. That's a step you can take, is a portion of it. Do something on a portion of your crop. Start doing some marketing decisions and take some steps. Write out some goals and objectives. If the market does this, I will do that. Have it in writing. That adds some clarity, takes some of the emotion out of it, and helps calm some of the fears.
So I do have a question about that corn that has gone across the scale that is now on a basis contract. Producers will need to make a decision on it. Do they need to make that decision today, or at least put in some kind of bid so it happens relatively automatically?
The thing about it is if you try to catch the cat by the tail, sometimes it's not the easiest thing to do. And so most producers, let's face it, are on a 10-minute time delay on their phone. And so let's say that they want to sell at $3.85 basis the D's here in the next week or two. If it goes to $3.85 basis the D's, they call their originator, and the originator says, you know what, 10 minutes ago I could have gotten you $3.85 basis the D's. I can't get it for you anymore. So that's why you have an offer in place ahead of time. And so, I agree with what Arlan's saying. The bottom line is this: if you have an offer in, it's going to take the emotion out. Just don't take the offer out. The cancel if close mantra. I mean, I know a lot of us have done it before. If the market rallies, your tendency is to think that whatever's driving the market's going to drive it even higher yet. But I'm okay with base hits here in 2019. We've been draining liquidity here the last 4 or 5 years. Ratios continue to get worse. I'm going to go for base hits instead of home runs, because if I can get a few base hits, it's going to keep me in the game. The other thing I want to point out is for 2020. With 2020 right now, with fertilizer prices fairly reasonable here this year, cost structure doesn't look to be going up significantly by any means. In fact, a lot of our producers at the $4 December corn level, just given normal production, feel like they can turn a profit. I'm not saying we want to go out and hedge the entire crop, but taking some risk off the table, like Arlan said, in chunks makes pretty good sense to me. Am I going to sell 10% at $4.05 basis the board or $4 basis the board? Maybe I want to sell some at $4.10. Right now, personally, on my farm, I'm 20%. Why? Is it because I'm bearish? No, it's because I know I can make money there. Now, if your worst sale, your first sale, if it's your worst sale and it's a profitable sale, you're going to make pretty good money this year.
Lance Honig, farmers like to have some kind of place where they can say, at least I know one data point. Oftentimes, they may very well use the USDA WASDE figures, that midpoint for cash sales. That's a seasonal's average cash price. I know you're not responsible for it. I believe it's $3.85 for corn at the moment. However, you are responsible for collecting some of the data that goes into developing that number. Where does it come from?
So we publish monthly prices in our price report at the end of every month, and we base that on actual purchases that we collect from those who purchase grain directly from farmers. So we've actually got not just a price there. In fact, we don't ask for a price. We ask for total bushels purchased from farmers that month, total dollars paid, and so we're able to share some of that information over to the folks at the WASDE. So they're looking at that preliminary data coming in already. We do publish the prices monthly. We don't publish the quantities. But so they're able to start to see how that market year average price is shaping up, obviously early in the season. And so at this point, not a tremendous amount of data going into that for the year, but that's what they do.
So on a year like this, I think one of the bigger challenges would be someone who's drying a lot of corn. And so if you're basing the total amount paid times the bushels, then I would assume that average cash price paid could end up being quite a bit too much, just simply due to the fact that you could be looking at a significant amount of money that's drawn out of the farmer's pocket just on drying alone. But again, that's going to be regional. I think in some areas it's going to be worse than others. But by all means, you get west of Mississippi guys that are having a hard time at this stage of the game. I think that it's going to impact them pretty significantly. Do you feel like this year there should be an adjustment made because of that fact that there's going to be so much more corn dried that essentially is going to be drawn out of the farmer's pocket?
So I may have oversimplified it a little bit because, that is true that we do ask for total dollars paid, total bushels purchased, but we do have a series of instructions on what to include and what to exclude in, what they're actually counting as those dollars. So if there's discounts being applied, things of that nature, there's a very structured list of how to account for that, because what we're ultimately after is what the farmer's actually receiving for that grain. So there's some adjustments already built into the process there to account for some of this.
Well, how do you deal with a basis contract, because they pay out maybe 70%, but not the whole thing?
Yeah, so the rules in place on that are is for those facilities to report those purchases when the grain's actually delivered. So we just make a standard, decision up front as to when it's going to be accounted for. And so, for a monthly price, obviously when that happens it can kind of make a difference, I guess. But if you look at it across the entire market year, that's going to wash out anyway, because the important thing is that you get the total dollars and the total bushels. And, of course, across the year, it doesn't matter if it was in, December or March.
Yeah, because on a basis contract, that grain's going to be delivered, but they'll pay 70%. Then you'll catch the other 30%, I suppose, as a sale when it's actually marketed. So you have another question.
Well, I was just going to follow up just a shade. Essentially that's where a lot of my concern lies, and it's not with you guys. It's the producer that is in a situation where maybe they're even going to collect on insurance. At least they've got some protection there. But the tough thing in 2019, very similar to 2009, in that I feel like there's going to be a fair amount of liquidity drawdown, in that there's no protection for the producer that has a significant amount of drying involved in getting that crop essentially delivered or whatever it might be. Now, if they've got a system at home, obviously they can do it cheaper, but let's face it, most producers can't do their entire crop in a timely enough fashion, and I think that might end up having a pretty big impact on the average cash price received by the producer on a net basis.
Yeah, I was going to follow up a little bit on Matt's comments on corn, $4 corn for next year, December trading it right around that $4 level. And the same thing with soybeans at $9.50. It's a lot easier for me to try to build a bullish case for corn if certain things happen over the coming year. And everyone's talking, well, if we get a trade deal, then soybeans, we're going to go up. Well, I'm not convinced of that. With African swine fever basically taking a third of the world's hogs, that's a huge demand drop in consumption. And so that's going to be a challenge going forward. We're looking at 950 November soybeans for next year. Not saying it can't go higher. Certainly we can have weather problems in South America. Really not seeing anything of any significance yet. And to this point, it looks like South American crop's on par to be a normal crop, so to speak. We pulled back 12 million acres this last year due to the spring we had. We'll probably get a chunk of those acres back, and so we're going to take production back, and we still have the demand problem with African swine fever continuing spread not only in China, much of East Asia, parts of Russia, Eastern Europe. Again, maybe a time to start looking at starting to lock in a portion of that crop and hope that's, if you're locking in some margins there and that's the worst that you do, that means you're doing better on the rest of it. But at least you got part of it.
Let's wrap this up. We'll get a final word from each of you. I think Matt Bennett from agmarket.net. We'll start with you today.
Well, definitely we've got a lot to talk about right now. It's a very challenging time, quite frankly, for producers here towards the end of 2019. I don't want to lose sight of what's ahead of us. So like Arlan said, there are opportunities for 2020 we need to be thinking about, but we need to be very, very, very proactive about how we're handling our 2019 crop. Talk to our grain originators, make sure they know what it is that we're after, and let's get some offers in place. Again, let's try to take some of the emotion out of it. And not try to do everything on the fly, because it makes our job that much tougher.
Arlan Suderman with FCStone.
Our best marketing opportunities were in the spring of the year when the market was trading the unprecedented weather problems we had during planting. It turned out that the genetics did an amazing job of dealing with that adversity this year. The market's going to assume, and I've already seen one weather forecaster talking about how everything's stacking up for another wet spring. It's going to be much more difficult to get the markets engaged the second time around based on how well they saw crops do this last time. So don't make hope your marketing plan. Actually have a plan, know what your break-evens are, get help with it if necessary, turn it over to your spouse if necessary, to take the emotions out of it and build a business plan around your marketing.
And Lance Honig with USDA NASS.
Yeah, and it's no secret that the backbone of the numbers that we publish come from the producers themselves. And so, two things there. One, I just want to personally thank all the farmers that take the time out of an incredibly busy schedule to fill out those reports and to get those forms back in to us. But also, just to encourage them to continue doing that, and those that don't, just a reminder that the better the information is coming in, the better the data is going to be able to be and the reports coming out. And, the better the information, that's better for everybody, including the farmer themselves.
Commodity Week is a production of Illinois Public Media. You may find and listen to the whole of the program anytime you'd like on our website at willag.org. That's willag.org. We're also available as a podcast. You can find us in Stitcher, SoundCloud, on the NPR One app, and Apple Podcast, Google Play, and even in Spotify. I'm Illinois Extension's Todd Gleason.